All right, so we have two setups we look for every day, and like I said, it's this is for the any futures, stocks, futures, any futures, stocks, currency markets. Also works on the forex and crypto markets. So it really doesn't matter what markets you look at; it's the same exact setup. We start out with a full zone retracement. Just to review for you guys, that is when price gets inside of our zone. A green zone would be a buy zone. So this is a buy zone all the way up. We're looking for pullbacks to that buy zone. Okay, red would be sell zones. You look for a pullback to that sell zone. Once you get to that zone, you'll look for these automated arrows to fire to give you a qualified pull-in to pull in on that specific chart. This is the longest chart I show as far as time frame in the room is a 120.20 Renko. I'm going to show you this morning on this video how to set the trade up with a longer Renko bar, a longer Renko, and then show you how to enter off a smaller time frame off the 113.13. So you can see that once you pull back into the zone, I like to, when we penetrate the zone or get inside the zone, if the zone's going to fail, then you'll see these red dots started to appear immediately. So you see the sell zone did not get an arrow, and you saw these red dots print up here and green dots start printing. That means we flip from a sell side market to a buy side market. So then we look for buy side setups. So the arrow will automatically fire, but you can see when the FZR will come up because the oscillator below here has to get below 20, and you have to penetrate or come within a couple ticks of the zone. If you're too far away from the zone, like this arrow or this arrow or this arrow, that is categorized as my next setup. My next setup that came up yesterday, these all fired live in the room yesterday afternoon. My next setup is called a momentum setup. So these are FZR trades because they penetrated the zone and they got a full retracement below 20. So that's FZR zone or FZR trade, just call it FZR. That's when you're getting inside of the zone or at the zone and penetrating the zone, but no opposite color dots appear before the arrow appears. So that lets you know that you have a full zone retracement qualified setup. Now this is a longer time frame, so this is great for position traders by itself. But if you want to trade with smaller stops, because your stops would be at the swing high or swing low of that Renko. So if you trade with smaller stops, then you can trade off of a smaller time frame. I'm going to show you how to do that in a second. The second setup, you can see that we are away now. Now we're away from the zone. We're away from the zone, away from the zone, away from the zone. And consequently, below, the oscillator is above 20. It's right at 20 here. It's above 20 here when the arrow fires, and it's above 20 here. So these are called MOMO setups, or called momentum setups. So now this is the only other setup you're going to look for on a daily basis. What I've done is I narrowed it down to two setups that happen on a daily basis over and over and over again. We don't need to have 100 setups, 50 setups, different setups that come every couple months. These setups work over and over and over on a daily basis on all these markets. The market's either going to be in a full zone retracement and fire outside that zone, right? Or it's going to trend change and give you a sell zone or a buy zone, and then you're going to have either a momentum when the momentum comes in the market. So after you come out of the FZR, the market gets some traction, and we start moving. The market's moving now, and you get in what's called a momentum setup. That is where the oscillator has to stay now. You don't want to get below 20. You want to stop right at it, which it did here. Or even better yet, you want to stay right above the 20. This is called a momentum setup. the pullback on the oscillator never gets below 20. The arrow fires, and now you have what's called a momentum setup because price action is already moving to the upside, and this is called a Momo. Now this is off the longer time frame chart of 12020. You can see the wrinkles are really smooth on it. I'm going to show you how you can check down to a smaller time frame on these trades. So that's not an MPO, but a Momo. That's a momentum setup. There's a Momo. There's a Momo. Now when you get a speed bar that comes in also, that's even better because you're catching the rolling position counter-trend traders. You'll see that speed bar that comes in on the short-term and long-term time frame. That means there's an exhaustion on that side. You can see the speed bar formed here, speed bar formed here on the Momo, and the price just accelerated to the upside. And there's a Momo trade there also. All right, so those are the two setups we look for. Either it's an FZR or a Momo. And this is off the 12020. Put down so you understand it. Renko on 2020. Now, if you don't want to trade off just the 12020, now some of you will trade off this and use the hotkeys to get in on a retracement. A lot of you guys like to use a 4-tick retracement on this chart, meaning you come out at FZR and you get an arrow that fires. A lot of you guys like to put limit orders in. 4 ticks works quite well. It puts a limit order in at 4 ticks. When that Renko bar retraces, you get filled at -4 ticks. A lot of you guys are using that. You do risk missing them on the Momo trades, but the FCRs you typically get filled on the FCR trades because they oscillate before they take off. Momos usually take off right away. All right, so that is the 12020. Now, how can we trade the momentum chart then with a shorter time frame? Because what I like to look at, even if you like to, let's say you'd like to trade off this time frame by itself, once an FZR comes up, the best momentum trade you're going to have is the Momo that is right after the FZR. Now, this is what's going to happen on this strategy that I'm building for you guys. It's got to come out of the FZR. It's got to come out of the zone first. Once it fires that arrow, you're going to look for the first Momo arrow on this time frame or the smaller time frame. So if you specifically want to trade this time frame, you look for the Momo to fire right after it comes out of the FZR. This is your highest probability Momo. The FZR here fires. That's your highest probability Momo. Now, what you can do, you can use a smaller time frame off the 113.13. Now what we can do is we can look for Momo trades that fire. We can look for momentum trades that fire right after you get inside the FZR. So then what you can do is you can use your smaller time frame and say, hey, okay, I see us coming into the Momo. Oops, where'd it go? I see it coming into the momentum trade. Hold on one sec. Let me get it back up here. Well, I will just change it here for you real quick. I think I just accidentally put it off there. Let's see. So let's change this to 113.13 now. So what you can do is you can actually enter the trade off of a lower time frame by doing one specific setup, and I'll show you. Now what we want to do is we want to use a smaller time frame to enter after the larger time frame has came inside of the momentum charts, into an FZR. So this is this morning's action. This happened at, what, 6:48. What you want to see is you want to see coming into the FZR in the larger time frame, which happened here. It shows in the smaller time frame also. See how he came in the momentum and arrow fired, automatic arrow fired. The first Momo that comes in will be the best setup. Now this is early action. Let me show you yesterday's action. So going back to what I just showed you, here is the 113.13. I just showed you the 120.20. So now we got a 113.13, which is a smaller time frame with smaller stops. But I want to show you the same price action. Now it's a 113.13. You still look for the two same setups, smaller time frame. Look how we get into an FZR. Right? FZR, but then watch. You go into a momentum setup. Let's see, find one here. Here we go. All right, so you go into an FZR. So this is FZR at the larger time frame. The larger time frame printed here, printed in arrow, because it's a full retracement. Once you get the first momentum setup that comes in on the smaller time frame, this is a Momo above 20%. That's going to be your buy signal. Now, the first one that crosses, I'll show you. I had several of them yesterday. So here we come out at FZR in the larger time frame, an arrow printed with all this price action that happened here on the longer time frame. It printed an arrow short. Once you look for that, look for a cross of the MAs on the smaller time frame. Look for the arrows to fire on the Momo on the smaller time frame. Here's a Momo short, Momo short, Momo short. And these aren't small trades. These are, what, 03 3/4 down to 94. That's almost a 10 S&P point trade off a small time frame. We had several of those yesterday. If you look, here's a great example. Again, so what you do is you come into, the best case scenario is this, is that here's where we have the larger time frame FZR, right? So you have an FZR here. We're inside of the zone. This is a smaller time frame, the 113.13. So the 120.20 fired an arrow right here at this level, right there, right that low, right, at 950. There's your FZR. You can look at the smaller time frame to fire a momentum trade right after coming out of the FZR, because the best momentum trades are coming outside the FZR. So this is what's called an extreme Momo. An extreme Momo is where I'm allowed to just pull back to the 20 and get an arrow, but better yet, if I stay above 80, I call this an extreme Momo. This is the best you can get right there. An extreme Momo because I'm staying above 80. And I'm getting an arrow on the small time frame, which is a momentum trade. And I'm crossed up. I crossed up. My MAs are crossed. It goes into another momentum setup and another momentum setup. But your best momentum setup, whatever time frame you trade, is after a qualified FZR reverses outside the zone. So our larger time frame reverse gave us a green bar. We waited on the small time frame and we got a Momo. Now, this is called a tweezer trade. I love these trades, and we have this on the strategy for you guys. If you get a double doji with an arrow coming outside of an FZR and it's a Momo, you're looking for a big punch. This is a big punch on this trade. 97.5 yesterday. That's all the way up to 18. You're talking almost 20 S&P points right there just on that trade from 9:54 to 10 o'clock in 6 minutes. 20 S&P points with a small stop. Tweezers love to explode with my arrow on Momo trades outside of FZR. This is the best setup you're going to get according to this algo. Right there, tweezer with the Momo with a qualified FZR. That's the most punch you're going to get on any market. I don't care what futures you trade, stocks, currency, crypto, doesn't matter. If you see this combination come out inside the FZR, Just watch. All you guys and gals that have the program on your own computers, go back and look. See for yourself. You get the first Momo app coming outside of the FZR qualified, you get these big punches. So do you have to have a tweezer? No. Just a regular chart will be fine as far as that goes. Because here's another tweezer. You get the tweezer. There's an FZR. But this is a smaller time frame. Here, let me show you something. So this is where the boxes, I did these boxes to show you where the FZR fired on the larger time frame. So an arrow fired right here in this box. It took all these bars to fire. So here's what I want you to do. I educate traders to look for the first momentum trade on the smaller time frame after you get the cross. It may be already crossed up, which is okay. You fire your first arrow after coming out of a 1-20-20 FZR. So this is a 1-20-20. We're looking at a 1-13-13 right now. But that box is comprised of a 1-20-20. So where that box closes, where you get one arrow. So that's a 1-20-20. But we're actually trading off a smaller time frame to get small stops of 1-13-13. Because your stops can be below these swing lows of where these arrows are at. Where the arrow's at, that's your stop. Right below, 2 ticks below that arrow, 2 ticks below the arrow, 2 ticks below the arrow, 2 ticks below the arrow. So if you look at yesterday morning, you got the 1-20-20 that printed an arrow rejection outside of the FZR, and there's your Momo trade, 20 S&P point play potential right there. It did not get above or below 20. That's a momentum. That's a tweezer, extreme momentum. This is an extreme momentum too. This is the best you're going to get, momentum trade you're going to get. Look at the extreme momentum. It stays above 80. Love these setups. They happen every single day, over and over again. You just got to be patient, wait for them. That's an extreme Momo. Right there. Why do you use a smaller time frame and use a 1-20-20 to do that? Because what can happen if this zone fails, let's say you come inside the zone right here. Here's a great example. So here is where the 1-20-20 printed. And let me show you why you can use this technique. Here's where the 1-20-20 printed. It printed an arrow, the larger time frame. Well, if you just go on the 1-20-20, if that turns a red reversal bar, I would stop out immediately if you use that type of chart, because price action is reversing, right? It should stay green, green, green all the way up. But look at the smaller time frame. It told you not to get in this trade. Why? Because here's where the 1-20-20 produced an arrow. This whole box, it produced one arrow to go long. But look at the smaller time frame. You can check down your smaller time frame and see if you have momentum in the market. We got the cross, yes. Do we have any type of momentum arrow that fires off? No. No trade. So it flips back over to red, and we go right back into an FZR short. Right there. So you can qualify using larger time frames. There's a larger time frame here that produced the arrow. Right there. So you can use a larger time frame to time the trade first, and then see if it crosses on the smaller time frame to get the first momentum long. There. All right. Here we go again. That we got the whole box came in. That's where the box came in. At this low, you get your crossover and you get a momentum trade right there off the smaller time frame. So you can use a larger time frame. You can use a larger time frame to fire in these trades. Now we haven't had any setups here except for out of the FZR. So you look for this momentum. This is the only trade setup you look for. You don't take these trades down here because it's a lower wave. You take the first one. There it is. Good to go. But what you can do is use that larger time frame, the 1-20-20, use a larger time frame to do what? You use this larger time frame to look for qualified FZR trades that fire out of the zone. Then you can check down to your small time frame to see if it crosses. So here, see how we got rejected out of the zone this morning? So it got rejected, an arrow fired, and guess what? The smaller time frame got you short right there at that swing for the nice push. Yesterday the same way. Let's look at all the price action throughout the day. So you can see once you come down into a zone, so here's what, 8 o'clock in the morning, 8:50 in the morning, you get a rejection out of here, right? Well, the smaller 113.13 got you long right here. Here you get a rejection outside of the zone on the 120.20, right? See, you got an arrow. Right here where that circle is where it got long on the smaller time frame off a momentum chart. See how it works? So it qualifies, what it does, that larger time frame qualifies at the momentum starting, and then the smaller time frame you can fire in there for continuation. Now here's where it failed. Now watch. Here's where the 120.20 failed. It got a reversal bar, the arrow fired, and this is one I just showed you on the 113.13, but guess what happened? The 113.13 never crossed up. It never fired an arrow. So guess what? You did not get in this trade using the larger time frame, trading into the smaller time frame. Smaller time frame never qualified. I just showed you that a second ago. But then we go right back into it, and we go back into a qualified rejection, arrow fired automatically in the 120.20, and the 113.13 crosses down. You get the first momentum trade, and the market starts falling apart. So you can see how I can qualify each trade. I'm putting this in the strategy. I'm letting the 120.20 get rejected first. So I'm letting the 120.20, right? We're letting this 120.20 get rejected, form the arrow, give the arrow automatically it forms for you, get rejected outside of the zone or at the zone, and then check down. So check this out. So this is 9:10. Let's go back to it so you understand. So we got a rejection at 9:05 to 9:05 right there, 9:05. It got inside the zone. This is the 120.20, and let's go back to the 113.13. So instead of taking the 120.20 because your stop's going to be a little bit larger, it's a larger time frame. Check down to a small time frame. I want to see a momentum trade happen off of a qualified rejection. So go back to 9:05, and I want to see a qualified rejection. All right, so there's a rejection. So this is where it happened. This is where I had the rejection happen, right? I just showed you off the larger time frame. An arrow happened right here off the larger time frame. All these boxes comprised of just one bar, right? That's one bar. So you look for the first cross on the 113.13, and you look for the first momentum arrow off the 113.13 after the 120.20 qualified for a qualified 20 rejection, and you get this type of price action as a 20 S&P point move. You get the tweezer, you get the momentum, etc. My point is, your best trades are going to be a rejected trade outside. Let's go back to it one more time before I shut this off at 9:05. That's a smaller time frame. Go back to the larger. The larger set the whole trade up, and it'll do this on a daily basis. Any type of market you look at, pull up any market you want. It's the same type of setup. You're looking for rejected 120.20 that's qualified. You don't have to trade off that 120.20 because it's a larger time frame. So there's your 120.20. Now look, see this difference? Now I just showed you where it pulled in on the 113.13. So fire that arrow right at that swing low. And then I just showed you the 113 that pulled you in right there. And that's the price action you get.